Welcome to the Big Mike Fun Podcast, where you'll learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in, because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fun Podcast. I'm the Big Mike Zlatnik, and today it is my pleasure and a privilege to welcome back Dr. David Phelps. Hi, David.
Mike, it is always a pleasure to see you, sir. Thanks for having me back.
Thank you so much for coming back. Our friendship goes back so many years. I treasure your wisdom. And what's new? We're recording this a little after Thanksgiving and probably going to come out a little bit later. So what's new and exciting in the world of David? You have a book out.
Well, yeah, I might use the book just to talk a little bit, because there's a lot of frameworks I think we can talk about that's relevant to your audience today in terms of our relationship, what we've learned together. I will put a small plug in for the book, only because I want to get this book into many hands as possible. So for those people who are watching, it's Own Your Freedom, or those who are listening, it's Own Your Freedom, Sustainable Wealth in a Volatile World. And I wrote this book with one of my mentors, Dan Kennedy. Some people may know that name, others may not, but Dan is a great business mind, copywriter, marketer, really is kind of a sage in my world, and someone I really respect. And so it was a real privilege to write the book, co-write it with him, when we talked about doing the book a year ago in 2020, kind of in 4 or 5 months in downstream from COVID, when COVID hit us. And I was thinking so much, Mike, about how many hardworking people in their respective careers or businesses, and in my world, it's dentists and other doctors. But no matter where people came from, COVID showed a great amount of vulnerability about the income streams, the active income, the going to work, the job, the career, the business. It showed people how vulnerable they were to something that we have no control over. And this is the black swan COVID. And so the government came down, and we know is forced shutdowns. In fact, we're still dealing with certain levels of that today, not what we dealt with a year ago, of course, thankfully. But people realized for the first time, gosh, getting up and going to work and having a profession or a career or a job wasn't something I could take for granted anymore. So how do I overcome that? And you and I would say, and many people in our tribe would say, well, that's why you need multiple streams of income. You need something outside your primary income source, not only for today, to deal with things that we can't control, like COVID, or maybe you have a health injury, or you have some kind of industry upset, or gosh, heck, more government regulation, which seems like that's oncoming. More things I think are potentially challenges or obstacles, Mike, to what we've taken for granted as being just hardworking people, diligent, willing to go to work every day. But there's obstacles potentially in our way today that we have no control over. So how can we diversify and set up additional wealth and equity investments outside of our active income that could provide for us those income streams when we need them, either now or maybe in the future when we want to slow down and maybe even hate that R word, retire. But someday people want to slow down and reap the benefits of their work. Well, what's that going to look like? Right. So I'll just start there. And that's what's new in my world, the book. So you can get it on Amazon, of course, in the book form. It's on Kindle, and it's also Audible if you like to listen. So that's my plug. Let's take it from there.
Thank you, David. I love the name, Own Your Freedom. And a lot of people, unfortunately, abdicate or they don't own it. They hope the stock market will actually take care of the problem for them. Unfortunately, it never will. The most difficult part is that folks want to generate passive income, generate yield. And yield in the stock market, I'm not trying to criticize stock market. I'm just trying to say that to own your freedom, you probably have to take the ownership of your finances and purposefully build a portfolio of alternative investments. And I love your word, diversification, diversified portfolio of investments that are income focused with hopefully some tax efficiency. In general, real estate is a great asset class that can provide that. So did I miss anything? Is this just, this? I'm sure there's a lot more in the book. But
I'll say briefly, Mike, that the book is written on principles. We didn't go into tactics, because tactics are based on what's current, right? And so there's lots of ways people can get tactical advice. I think that comes down to actually finding something we can talk about, sure, is a tribe or a community or a network where you can get access points and the frameworks and the relationships to be into alternatives. See, the reason people go to the stock market is because, well, it's always been there. It's always been promulgated as the retirement planning model, and because it's easy. And Wall Street's got billions and billions of dollars to market what they do. And there's lots of people, not billions, but many people who make their living off of being a conduit or middleman or platforms to help retail investors access investment opportunities. And Wall Street, it is what it is. I'm not here to demean it, but when you're dealing with Wall Street, you're dealing with, and I'm putting air quotes here, the market. When you're dealing with the market, you have no advantage. You're buying or investing in the market, whatever the market is today, wherever the market is. And of course, if you catch the market when it's down, when it goes down, like in the last Great Recession, and you put money into it, then the odds are it will rise back up again, as it does. But then the problem is, when you're back at a top point, what do you do? Where do you go? I mean, do you pull your money all out into cash? Well, maybe, but for how long? Well, not too long today, because we know inflation is running heated again, like we had back in the 70s. Now we're heating up. Just yesterday, Jerome Powell, I'm sure you caught it, finally came forward and said, we're not going to use the word transitory anymore. You know, we've been talking about inflation being transitory, and now they're actually admitting it probably isn't. They're trying to, so we have these issues, Mike, about if the market's top heavy, which I believe it is. I believe that the market's sitting on a place where it could happen anytime, or maybe not for 18 months, but who knows what happens when we go through the correction. It's something will trigger it. It's just a matter of a law of the universe that we have business and economic cycles. I don't care what people think about the government and the Fed stepping in to save Wall Street like they did last year during COVID. They are running out of gas. When that actually happens, do you want to be sitting at the top of the market? It's like musical chairs, right? You played it when you were a kid. Your daughters and your kids probably play musical chairs. Everybody's happy when the music's playing. When the music stops, somebody's without a chair. Well, I don't want to be that person, and neither does anybody listening to this call today. So how do you do that? How do you get away from that? I think you've got to be more diversified. Maybe not take everything out of the stock market. I'm not saying that, but I'll just give you a quick example, Mike. I had a call today with one of our newest members to Freedom Founders. He actually is a businessman. He doesn't have to be a doctor or dentist, which is fine. I mean, we help all kinds of people, but he had a liquidity event, which means he sold a business within the last year, has a fair amount of capital. Because he didn't know what else to do, he's got a financial advisor who has put him in a diversified portfolio of a lot of stocks and index funds, and that's what they do, right? And again, I'm not faulting it, but he, to his point, said, I'm a little bit concerned about having everything in the market. I go, well, I think you're probably thinking right. You don't want to have everything in the market. He goes, I came to Freedom Founders because through my friend who's a dentist, he said, you ought to check this out. Because this is a place where you can get access points through relationships. You're not going through a Vanguard, a Schwab, or Fidelity where you click a mouse or someone says, do you want to be aggressive, or do you want to be, moderate your approach? Do you want to be risk? It's way beyond that, but you've got to be the person as the monitor of your future financial orchestration. You've got to take some charge of that. You can't just throw it out there to somebody who says, I'll put it in Wall Street and diversify for you. That's not diversification. It's you're buying into the market. And the market today is an average of billions and trillions of dollars. And when you're doing that, where's the advantage? That's what the problem I have with it, Mike. Where's the advantage? I think I see only disadvantage unless you're entering the market at a low spot and then just letting it naturally take its course, which it will rise back up. But where do you go from here?
Yeah, great wisdom, David. So forgive me, the lessons learned, again, I'm not trying to say what's in the book, but I think what you said is the book is about strategic things, not tactical. As long as you get the right strategy, then you line up the tactical solutions for the strategy. You always start with the strategy. I concur with you that buying at the market, you're at the mercy of the market. And the big difference between what we do day in and day out versus the market is we have control, we have predictability, and we select the deals that are essentially bought through very inefficient market. Real estate is generally very inefficient. So finding the best opportunities is an art and a science. Yeah. And we write the checks with those great operators who find these great deals. So you basically enter the market often at a discount to the market. Not only that, one of the biggest advantages of the at least alternative investments in our ecosystem, and many trusted advisors in the Freedom Founders Group and folks we invest with, is that they find great deals and they create value. The value creation makes a big difference. Doesn't matter what the market does. If the market goes up, the value creation gets magnified. If the market goes down, the value creation work creates a safety element.
Right.
So let's explore a little bit that. So why, besides being a leader of Freedom Founder community, you're also an investor with us. So
Sure.
I would love to hear your thoughts. Why do you invest with us? What do you like? What you don't like? What matters? What doesn't matter? Because many investors, many folks who listen are investors with us. And this is your personal opinion. You're not giving any advice, just more sharing. What do you like working with us? And what do you dislike working with us?
Well, first, Mike, I like you, and I'm being very forthright. As you said, we met many years ago, and investing through with other people, which is what I think most active business owners need or want to do. When you're an active business owner, you don't have time to go out and ferret out or curate potential investments. It takes a lot of time, effort, and experience. So what I found in life, which is hard for some people to let go of, the control aspect, but I found in life that finding the right people, your inner circle, your team, but also potential investment opportunities, the network, the relationship capital, that's really the big trigger, the big inflection point, what the game changer, if you will. That's what changes for people who come to Freedom Founders, because a lot of them, not all of them, but some of them have tried doing some alternative investments on their own. I mean, that's typical, quote, turnkey properties, rental properties, and that's supposed to be all good until they find out, they're sold by a sponsor. Now they turn the management over to some third-party management, and now you've lost control, and you go, this real estate stuff doesn't work. So I think what you got to find is the right people. Now that takes a little bit of effort. That's what Freedom Founders essentially does for our tribe. Is we've created a pathway, a speed to access through relationships. Now, where does that come from? Well, my job is to go out and be part of other groups, other mastermind groups, other communities, other seminars where people like you are there, boots on the ground, on the street, knowing through your relationships who are the deal makers, where are the opportunities. I'm a step removed from where you are. You're the one who's actually there, but I've met you, and so getting to know you and know who you are and know what you think, what your beliefs are, what your culture is about. See, that took some time, and now what I do is I leverage our long-term relationship, what I know about you, what I know about your consistency, and the fact that you always show up and you're always communicating, and you never drop the ball on anything. You're not perfect. No one's perfect. But what I'm saying is, I know Big Mike is always there, always shows up. His team's there. He's got a long run rate. See, that's who I want to do business with. So I just bring our relationship and other trust advisors that I've built over the years to Freedom Founders in one place where people who don't have the time to go do that can come and build off those relationships. So it's about the right people, the right relationships, and then getting some education. I mean, you love, Mike, I know you love working with educated investors. I mean, you'll talk to anybody because that's who you are. I mean, you're a servant. You'll give. You love to educate people. You're not a seller. You're an educator. And then people who like what you're talking about and then have a belief system in you like I've had, say, okay, I'd like to invest with you. So it starts with the education, starts with serving first, and you always do that. But I think that people need to find, people like you, and it takes some work. It takes some effort. That's the hard part that a lot of people don't want to do. They want easy street, right? But easy street comes with its own list of disadvantages. Easy means you're buying into the majority of something. You're paying retail for something, because if it's easy, it can't be as good as something that's inefficient, like real estate alternatives. Well done, it's very inefficient. It's very dislocated. You've got to find the people to get access to the right investments for your particular forward-looking orchestration of your finances.
That's great commentary, David. Thank you for your wisdom. And it's so profound what you just said. The connections, the network, it creates access. The community creates access to the vetted deals, vetted operators. And as a fund manager, I have to say that it's hard. It's both easy and hard. Hard that it takes time to build these relationships. But once you build them, the deal flow starts coming through the community. I'll give you an example. One of the episodes that probably will come out before this episode, is episode with Eric Goodman. And he's a member of the Freedom Founder community. He's a great friend here in New York. And we have this property on East 73rd Street we're working on. And what's really interesting, talking about community, right? It's a great deal. We found a great deal. What did we do with this? The first thing we did, we went to Freedom Founders because we are part of that community. And what happened before we knew, we filled the deal. We filled all the capital that we needed came from the community. So for us as an operator, it's easy, convenient, and an honor to work within the community. But on the other side, we get the capital into a great project very quickly. We don't have to spend time marketing the deal. So these relationships create sort of best access points for us to get the capital or for investors to participate. And on the other side, members need access to vetted deal flow, and that works both ways. So another interesting point, I wanted to make this comment. I was just chatting with one of the other members of the community, and we're discussing the difference between kind of investing in some of these value add strong deals, essentially off the market, and they have value creation, and as a result, there's a little bit more risk, of course, but the upside is greater. So these deals that are properly structured with the right opportunities, they create better upside than the market deals. So the discussion is, are you better off investing in the value add deals with the right fund managers, sponsors, operators, take a little more risk versus going with the market? And the market, even in real estate, you can go buy a building that's marketed on LoopNet or any of the other MLS and pay full retail price. What return are you going to generate? Is there kind of pluses and minuses? And the obvious answer is, of course, you're better off with a sponsor operator. You're paying them, let's just call them, for their management, for their promote, for getting the deal done. The math works out easily to be much better return by participating with these value-add projects with the great sponsors, operators, fund managers versus you buy at the market. The market itself can lift all the boats. So appreciation could be equal in both, but the value at work creates more value than versus the pure market, even in real estate. So any kind of thoughts on this? Just a little bit of that, because it's a fundamental point. It's not stock market, it is real estate market, but you can go pay full price, maybe overpay for the property and really be at the mercy of the market itself.
Well, I think to your point, Mike, there is a lot of money that is paying retail today. There's a lot of money chasing yield. Well, we've had trillions of dollars that have been imputed into the economy from the Federal Reserve this past year, and there's still more money with infrastructure bills. I mean, there's just still more money. There's more printing. So all this money comes flooding to the marketplace. It creates bubbles. It creates asset value increase to the point where unless you know what you're doing, and that's a key point, you know what you're doing, you know how to look at the value. Whether you're looking at cap rates, you're looking at the value add opportunity. That's why I love the inefficiency of real estate. It takes someone who knows what they're doing to assess where are the right opportunities. The problem today is there's a lot of people out there. In fact, I have to say the majority of people today out there, Mike, and this is not you. That's you're long term. You've been in this for many, many, many years. You've been around the block. You've been through the cycles. But a lot of people that are raising capital today, just because it looks easy to raise capital when there's so much out there, people, investors and seniors and people are starved for yield, because in the typical conservative investments, we know you get less than 1%, less than 0.5% today. And where typically people would invest their money to be very conservative, the yield return's not there at all. So what are the choices? Either starve and not put food and medicine on the table, or you got to play the stock market, which until it corrects, it's good, right? Until it corrects, or you look for the right real estate. The right real estate means you've got to have a sponsor, an operator who's been out in the field, has the context to know when is a deal a good deal or not. The problem that many have is they're good promoters, right? Good marketers. They promote why you need to be in real estate and we're this, that, or the other, so that they can look good because they're good promoters. But they get all this capital. So people sign up. Yes, I need to invest my money here because you're showing me in the last few years, your last deal, produced an IRR of 18%. And of course, it's going to happen again. Well, most of them just got lucky. They don't know what they don't know. And so people throw their money, and then all this money comes, and well, what's the promoter sponsor supposed to do with that money? Do they sit on it? No, they have to get it working, right? I mean, the deal is you got to make the money work to return to your investors. So what do? If they don't have good connections, if they haven't been in the game a long time like you have, and know that you can find the right deals and be patient enough to wait until you have the right deals, these other people just go and flood the market. They'll buy at retail because they got to get the money doing something. So they'll buy a project that doesn't really have any good upside. It's got a run rate today. They're probably overpaying for it. They're probably buying it on projections of pro forma that don't make any sense. It's just based on what's happened in the last 3 years. I know how conservative you are with your underwriting, and you always look at it from such a standpoint that the run rate we've had maybe the last 3 years, well, that may not happen. We're gonna look at our run rate being here instead, and then anything above that is icing on the cake. See, I want to work with somebody who's had that level of experience and discernment about what's the right opportunities. I don't want to be with some newbie who last 3 years has just looked like a genius, because everybody's a genius when the market's up.
Great, David, you had such wisdom in these words. This just resonates with me with a live example. Like literally, I'm gonna give you a live example. So we invested in a deal, value add deal with a very, very competent sponsor operator, and we're on fund of funds. So we have these very high, I call them institutional, highest quality, highest experience sponsors operators. I want to say this was 2017, maybe 2018. We invested in a project without naming the project. And the project is being sold right now. We're getting great price for, as a seller, we think we're getting phenomenal price. We're thinking they are overpaying to the nose, the buyers. So I know it's under contract to sell, it's closing in December. It's imminently closing. What's really amazing and fascinating, just back to what you just said, I get a notification, I'm on a list from Realty Mogul. I'm just, for no other reason that I monitor some of these crowdfunding platforms. I'm signed up as somebody who's getting their deals. I get an email, Realty Mogul, and then the deal has the same name as property as we're selling. And for a while, it's like, wait a minute. And they are sending the deal with IRR target, I want to say 15 or 16%. All the value add has been done on the property.
Been done, yeah.
They've somehow cooked the books. I mean this with all due respect. Listen, I maybe their assumptions are valid. Maybe they'll play out, but they came forward with what I would believe probably pretty aggressive assumptions to somehow have the project look like investor return. This is after sponsor paying their fees, their promote, to still get 15, 16% return. It means the project level probably returns around 20%. Somehow they think the past results, the past years will continue. And I don't know exactly the assumptions, so I'm not going to say anything other than I saw it there, I looked at it, and I said, wow, what do these crowdfunding sites promote? They promote fully cooked, fully booked deals. Maybe at this point it's cash flowing, but most of the return projection has to be based on the back end because the cash flow can be very high. We're selling this at a relatively low cap rate. So we're getting great price, low cap rate. And this was my observation exactly to the point that you said, that some of these platforms that are brilliant marketers, they got many, many people to go look at the Realty Mogul for the deal. They bring the deals to the market that essentially are underwritten pretty aggressively. And they're no longer what I consider great opportunities. It's more like you're paying the market price for the deal. If things continue to run in a very inflationary environment, the tide will rise all the boats, and they may be able to hit the numbers and even beat them. But it's back to your point that I know the deal, and it's a live example of what you just said.
I have an opportunity like you do, in areas where I have connections, and I have a lot of connections in the dental and healthcare field, where again I'm a part of forums where retail investors, which is who we all are as individuals, be you a doctor, dentist, lawyer, Indian chief, we're all retail investors, trying to figure out what do we want to do with our money. And so there's always these investment forums for doctors and dentists, and it's they're just throwing things at the wall. But I saw one the other day. This is obviously someone a dentist who wants to invest in real estate, has read some promos here or there, and actually said, there's somebody who's offering a syndication. I don't even remember what the asset class, multifamily, I think it probably was. And this person was asking a group of novice investors, other dentists, what do you think about this? Well, it was a female, so I'll just say she doesn't even know the questions to ask. And I don't even know where to start with something like that other than say, good for you, number one, for looking to diversify. That's good. But secondly, you've got to be very careful about having enough knowledge and somebody to help you vet who it is you might be, because a syndication is a dime a dozen a day. I mean, I can Google today real estate syndication, and I'll get page after page after page. I mean, there's no end to where I can invest my money. It's who, and then the who knows what. That's where you got to be plugged in. So my point is, to the novice investor who's listening today, yes, you should be looking at alternatives. I think that's the smartest thing you can do. But who you do it with, who educates you, who's got the track record, who's going to give you real pro forma numbers, and who's connected on the street, that's what you've got to do. And if you're not willing or don't have the capacity or time to do that right now, then I'd say don't do it, because you're gambling your money if you just put it with someone who said, hey, I've got the syndication over here, and based on the last 3 or 4 years, to your point, Mike, Realty Mogul, not dunning them. I'm just saying, to your point, if they're looking at the deal that you've been writing for the last 4 or 5 years, and at X, and their pro forma is going to say a 16% IRR, yeah, if they're buying at a low cap rate, it's all back-ended saying, well, we're going to have the same value added. Well, they can't have the same value added. And is inflation going to be there for 4 more years? I mean, maybe, but I wouldn't bet a pro forma on it, right?
Yeah, exactly. And what's really, I don't have the final numbers, and the deal hasn't closed yet, but off the top of my head, I think our IRR is going to be in the mid to high 20s through the value add. So whatever the assumption, they probably struggle to get to 15 to 16. Well, we've gotten a whole, again, past results don't guarantee future performance. Past results are not indicative of future performance. So we are now in a fully baked market. We are sort of at the peak of a cycle, although it may continue to run forward. At this point, there's a lot of speculation, but to avoid speculation, investing, as you said, with folks who have ability to identify great deals, off the market deals with strong value add, can make all the difference in the world.
100%.
So just a couple of final thoughts. As all good things come to an end, so does this interview, this discussion, this podcast. Any parting thoughts? Obviously, great book. Or the other thought that I wanted to share was that one of the great things that the Freedom Founder does, and just observing, again, I'm a trusted advisor, I'm not a member, a dentist, somebody who joins, but I see great education. I'm honored and humbled to be part of that education, but I see what Freedom Founders does. It requires members to get an investor badge, which requires a whole lot of education. Why it's important? Because it's easy to click a button, make some kind of investment, buy a stock, find some syndication on the web, throw the money, and then see what happens. Before you do that, you got to educate yourself. And every investor, I like to ask this joke, and most people don't necessarily, there's no right answer, or it's just a question. It's a question that stimulates food process. So when you're investing, are you investing to learn or learning to invest? You always have to do both. Every time you invest, you better be learning from it. When people invest with us, I tell them, listen, show up on quarterly calls, get the updates, learn, because it's not a game of perfection. It's a game of learning and improvements. On the other side, learn before you invest, because it's easy to throw the money at something and you may wind up with years of no return, bad return, or lose your money if you make a mistake. So it's never the right or wrong. Any final thoughts? How would folks, if they have interest, if somebody's listening who is a doctor or a dentist, that'd like to learn more about Freedom Founder community, what's the best way to reach out?
Sure, Mike. They can go to the primary website, which is Freedom Founders. That's Freedom Founders, plural with an S.com. And, I put out a lot of content, blog posts, the Dentist Freedom Blueprint podcast, which I've had you on, and a lot of topics around financial acumen and wealth building and passive cash flow. It's what I love to do. And so and I think the book, again, I'm really happy with this book because it's a very principled book, Own Your Freedom. If people want to pick that up, I think it's very generationally applicable. Young people, whether they're ready to invest in real estate or not, it's not all about real estate. Yes, there's fundamentals of real estate in it, but there's other principles of financial acumen, which I think is generationally applicable. So I think people would enjoy the book and maybe even find a benefit of giving it out for a Christmas gift to people they care about. I'm not about selling books. I don't make big money off of selling books, Mike. You've done books. That's not what it's about. It's really getting a message out people, and I enjoy doing that.
I think it's a great message. I have to get the book. Honestly, I admitting on the podcast, I didn't read the book. I'm going to read the book. So I need to spend time reading the book. And two, I need to give it to one of my kids. And it's really interesting. She loves real estate. She's been asking me questions, and she's been learning. But she's also learning some of the Wall Street messages. She came to me the other day and said, "Dad set me up with the Robinhood account because I want to trade stocks." And I said, "I will do that so you could learn, right? I'm not doing it for any other reason. I'm not a big fan of stock market because you have no control. You just buy. It goes up, wonderful. If it goes down, I'm happy about it. You have no control. But I'll set you up with an account. I'll put half the money. You got to put half the money. And you just go do your thing and see what happens, right? Learn. As a learning exercise, I'll do it. But I think most important things is the book. I told her to go read Rich Dad, Poor Dad. She read, it would open her eyes. And she's 16.
That's
and
great.
She's learning in school very different things, but they are getting a little bit of the stock market education for whatever classes. And she's getting curious. So I would rather have her learn these fundamental principles of long-term investing and strategy, and appreciate real estate as one of the most advantaged asset classes and a way to build wealth, rather than let the stock market hopefully do it for you.
That's right. That's right. Well, it's always a pleasure, Mike. Thanks for having me back again.
Thank you, David, very much. Thank you for your wisdom and sharing.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike's slot name. Keep listening and keep investing Big Mike style. See you on the next episode.